back to Fed Chairman Ben Bernanke now. He may have more monetary tools at his disposal, but our next guest says he made it clear there are limits to the effectiveness of those tools. Mitch Stapley oversees all fixed income strategies at Fifth Third Asset Management, which has about $16 billion in assets under management. He's joining us now from Grand Rapids, Michigan. So, Mitch, the chairman making it clear that, he may have more tools, but it's up to sort of other policymakers, perhaps other types of policymakers now. Is this sort of acknowledging what many in the market have been saying for a long time, that the usefulness of quantitative easing has sort of run its course?
Yeah, absolutely. I think it's one of those good news moments for the market where the Fed chairman came out there and basically put the ball back in Congress's court and said, what we can do from the Fed standpoint is basically try and assure price stability. And that's our mandate. We can't, we can't restart the jobs engine in the economy. That's a fiscal tool that has to be used out there. So from the Fed standpoint to say, listen, we've got some other stuff we can do, but understand our abilities to really impact employment growth, job creation, stuff like that is really limited. Put it back, in the court of Congress, I think was one of the good news moments for the market in the last couple of weeks. So
how do you play that as an investor? I mean, as we know, Congress is not terribly predictable unless you predict that nothing's going to happen because too much arguing is going on in Washington. So as an investor, as a fixed income investor, what do you do?
Well, I think as a fixed income investor, you understand that interest rates, given the levels that they are right now, especially on the short end, are basically punitive from an investor standpoint. So you've got to look for alternatives instead of being in treasuries. Treasuries basically are return-free risk out there, certainly out to, say, 5 years. So let's start looking at things like short asset-backed commercial paper. You can find short commercial mortgage-backed securities that are yielding 250, 300 basis points over treasuries, over collateralized, very high quality. You can even begin to look at things in the finance sector, in the bank sector, in terms of senior corporate debt that's attractive. And if you want to take that one step more, instead of just buying the bank stock, buying the equity position, look at the preferreds. You saw Warren Buffett do that yesterday with Bank of America. That's a strategy we've employed at FTAM for a long time in the financial sector. Look at the preferreds instead of the common stock. Much better yields, and that's a great way to play the financials now. So there's opportunities out there, just not in treasuries.
So, Mitch, it sounds like your risk appetite right now might be a little higher in quest of that yield.
Well, I think that's one of the things you do have to say. You're making a pretty digital decision right now, Julie. You're saying, is the economy going to go into a recession? If it is, then you've got to take the zero yield in treasuries and hide out there. It's our feeling that the economy is going to continue to grow at this slow sub-trend pace that we've had. And I think that's one of the things that the equity markets saw in the chairman's speech today. He was not, while you would say upbeat on the economy, he wasn't as negative as maybe market sentiment was over the last couple of weeks about the second half of the year. So he said, okay, we're in a slow growth period here, but he did not say we're getting ready to slip over the edge into a recession. So if you're in the path that says, okay, we can be in slow growth, but we avoid a recession, then you want to be increasing your risk appetite. That's the call.
Just very, very quickly here, Mitch, how about cash? What's your position there right now?
You've got to be, really trying to minimize cash, avoid cash. Again, unless you see the economy is going to be shifting into a recession, you earn zero on it. Headline inflation numbers at 3.6% mean you're losing money every day you sit in cash.
All right, Mitch Stapley of Fifth Third Asset Management, thank you so much for giving us your perspective. Very important to take a look at fixed income on this day after Ben Bernanke made those comments. Thank you.